I don't think you need to do the dance. We are live. Hello, folks. This is Bill and Brian with Energy Rogue. Brian, roll the intro.
There we go. I don't get to do the dance, huh?
No more
No.
dancing, please,
Okay.
Brian.
Okay. Well, what do we want to talk about today,
So
Bill?
we're going to talk about crude today because, gosh, why wouldn't we else be talking about crude? That's why we're Energy Rogue. So the we're still both very bullish on crude. It was hard to tell it last week and a little bit this week.
Right.
But Brian, why don't you go through the fundamentals for us real quick?
Okay. Let's take a quick look. Crude production has stayed pretty steady at 12.1 million barrels a day. And part of the reason that we're bullish, is we have been in a recession. Isn't that what they say, Bill? Is that what they say?
You know the difference between a recession and depression is, don't you? A recession, your neighbor loses their job. A depression, you lose your job.
So they keep. So here's the thing: crude went from $90 down to $73, and really it was recycled news, which was recession, demand concerns in China, and anybody who wanted to be bullish, which we have been, has been saying,
"You're killing me, Smalls."
That's right.
The thing is that we see the fundamentals, and as you can see on your screen, these are charts that are in Rogue Edge. So come subscribe. It's $89 a month. If you don't want to subscribe, reach out to us. Just reach out to Bill, Brian. We'd be happy to talk you through a little bit about the fundamentals. But what we look at, most of the market looks at the crude commercial stocks, and all these charts are interactive, so you can go back in history, see how things have progressed. A lot of people look at the commercial crude stocks. That's not the whole story. The whole story is in crude and products total stocks. This is both sides of the refinery, upstream of the refinery, downstream of the refinery. So if we've been in a recession, I would have hated to see what our stocks would look like if we've been in a healthy time, because we're using it. We're using all the crude, and that is with an artificial inflation inflator in the supply side of the market based on SPR. We've been taken out of strategic petroleum reserves to tamp down this crude oil price. And yes, it has worked, and we've gone from 90 down to the low 70s. These are the levels that we identified: 76.26, 81.29. These are technical levels. We think that it is highly likely we could extend up to 86 or 85.94 and quite possibly back up to the 90s. And I would expect that move relatively quick, but negative news keeps coming. Today and yesterday, there were three bullish things. OPEC talked about a cut.
Again.
What was the other one? China rolled out vaccines. So that's, for seniors and everything, China rolled out. And what was
then the EU ban starts next Tuesday.
Oh, so there's four things. So the EU ban starts next week, and then we had a 12.6 million barrel draw out of stocks, and that's what we're kind of seeing on the crude fundamentals side, and that's part of the reason that we don't see a lot of reason to look at this going down, because let's take a look at production versus rigs, Bill. Let's take a quick look at that. Let's just take a look. This chart says January 2021 to current. So we went from 11 to 12.1. That's pretty decent. That's a 1.1 million barrel a day. Let's take a look at what rigs took.
And that's in production. That didn't include the SPR.
Let's take a look at how much rigs we needed. So what was the time frame on that? That was January of 21, right? January.
Now 2 full
20.
years.
So we went from roughly 340 rigs to 700. So we double our rigs and only add 1.1 million barrels.
Double our rigs to add 10% production.
Yeah. So anyhow, these are the things that Bill and I talk about, and part of the reason that our customers like engaging with us is we really talk through the why. You know, when the crude market goes up or goes down, a lot of people are confused at the why, and we try and add context to the why, and so that's why we're here. We have over 120, 130 interactive charts to help you identify what's happening in the market. Plus, every week we do a stream like this to our members, and they get access to probably, I don't know, we cover natural gas, crude oil, NGLs. We cover just about anything that touches
LNG exports, imports.
Yep. So if
European prices as well.
If you are curious about the energy markets, you can reach out to Bill at bill@energyrogue.com or Brian, BPIERI, at energyrogue.com. So, and if you don't want to, you can just go to our webpage, energyrogue.com, and just click on the contact us. Reach out to us, connect with us. We'd be happy to talk to you. So
yeah, so people come go rogue with us and come get the rogue edge so that you will be on top of what the energy markets need to be and where they're going, and sometimes even just a little bit of insight of why some of these things happen.
Well, and I'll leave you with a little bit about what's coming down the pike. We are gonna launch a free tutorial, a free course on how to determine your natural gas price, how to determine your crude oil price. And we have various working models that are approaching launch on gas prices and crude prices for the individual producers, so they can identify what they should be getting.
And not just for the producer, also, folks, if your business is dependent on the price of oil or natural gas, you need to be engaging with us.
Yep.
So reach out, let us know. And that's all I've got. Brian, what you got?
I think that's about it. So we're going to end the broadcast here, and we really appreciate anybody who reaches out to us. We really appreciate our customers. And as always, when we're talking about the markets, we are bullish from here. We're expecting it to go up, so what we're looking at is,
but watch out for in your ear.
Exactly.
So you gotta watch out, because sometimes it can change on you. And so reach out to us, let us know. We'd love to help you understand the why.